Good morning, everyone. Welcome to the TradeStation Masterclass. I'm glad that everyone's here. Thank you for joining me in this morning. Today is August 13th, and it is a Tuesday. And today we're going to do a technical analysis presentation where we highlight Bollinger Bands and Bollinger Bands Squeeze. These are technical indicators that are part of the TradeStation platform, but sometimes we're not really sure how they're calculated. So we're going to take a deep dive into these indicators to understand all the different plots and how they're customized so that we can start using them in a more practical. For those that are new to the TradeStation Masterclass, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. Always a pleasure to talk a little bit about the TradeStation platform. And today we're going to some technical analysis and maybe a little bit of easy language if we get to that point. Let's go through some disclosures before we get started. Keep in mind that every symbol and idea that I talk about is for educational purposes only, that these are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and past historical performance is no guarantee of future results. If anybody needs additional information on these disclosures, go to www.tradestation.com/important-information. And as I said at the very beginning, today is a technical analysis class where we highlight several technical indicators and we dive deeper into their calculations and mechanics. Today is all about the Bollinger Bands and consolidation. What is consolidation? It occurs when volatility is low and prices trade within a narrow channel over a number of bars. So if you've been trading for a while, you know what consolidation is. You know what consolidation looks like also in a chart. Bar candlesticks start moving sideways. The size of those candles is not as tall as other candles when there's high volatility. So it's very easy to identify in a chart when any security is going through a consolidation period. Markets are generally going to move between periods of high volatility expansion to low volatility contraction. And this is normal in every single market. You see markets explode and then lose steam, kind of mellow down a little bit, and then explode again. And we see that over and over in many securities. And what we're trying to do is identify those periods where we have low volatility, where everything is so calm, and an explosion is expected. Because generally after this market indecisiveness, where things slow down, everyone expects something to happen. So where is the market going to go? Is it going to break to the upside? Is it going to break to the downside? So those are some of the things that as traders we need to look out for, but these technical indicators are going to help us identify those times when we need to be paying attention for those breakouts. So how to identify a squeeze? There are multiple techniques, multiple mathematical formulas to measure the concept. There are multiple custom indicators out there. Some educators or some traders may sell their own concept or their own version of what a squeeze is. And there may be different definitions of what a squeeze is. Today, we're going to focus or talk about squeeze in the sense of the Bollinger Band. Bollinger Band is a built-in indicator of TradeStation designed by Mr. Bollinger, and it's a simple calculation, and we're going to measure the squeeze of those bands and what it translates to. The Bollinger Band squeeze happens during periods of low volatility, meaning the bands are narrow and prices moving sideways. On a chart, very clear to see, the bands in a band start getting closer to each other, and that's what a squeeze refers to. During these times of low volatility, yes, the price tends to move sideways, and in due time, a breakout happens. and then the market starts moving again. Usually there is a breakout on one of the bands of the Bollinger Band. And usually once that band is broken, usually, the market tends to move in that direction. However, there may be cases where a pullback may send the prices in a different direction. So let's go ahead and take a look at measuring squeeze. For those that are familiar with the Bollinger Bands, we're talking about a simple moving average and then a calculation of standard deviations above and below that simple moving average. Very straightforward calculation. The mathematical details are inside the indicator. As a TradeStation user, you have access to the easy language code. So all of us can go inside of the indicator and see how each one of these pieces is calculated. And there's another variation of Bollinger inside of the TradeStation studies that we call the Bollinger Band width, which takes the difference between the upper band and the lower band and divides it by the middle band. We're going to take a look at those specifics because a lot of times, when we write a mathematical formula using words, it's more complicated than seeing the calculation performed in front of you. So that's what we're going to do. We're the indicator and calculate those values ourselves so that there's an understanding on how those lines show up on the graph. The result is a percentage, which is the difference between the upper band and the lower band. And of course, the values are going to decrease when the Bollinger gets closer, or the bands get closer to each other, and the value will increase as they pull apart. That's pretty much what the calculation is going to try to tell us. And of course, once those values get lower and the Bollinger Bands start getting closer to each other, that's what we're going to look out for because we would be in a period of squeeze. One thing to note is what it says right there on this third bullet point, that the bandwidth value is relative to the symbol that you're looking at and should only be compared to its past bandwidth fluctuations. So we're not able to compare the bandwidth of one symbol to the other. You're not going to be able to determine which stock is a trading opportunity based solely on the one bandwidth value because it's only relative to the symbol that you're looking at. And we're going to look at several examples today that will make that point much more clear. The signals, of course, in a bullish squeeze, we're talking about the bandwidth dropping to historic levels, meaning that the market is sideways, very low volatility. The bands in the Bollinger Band are closer to each other. And then the price breaks through the Bollinger Band upper band or the Bollinger upper band, signaling a new upward trend. The volatility also increases. On the bear side, we're looking for something similar. We're looking for the bandwidth to drop to historic levels. So on both sides of the market, if you're bullish or bearish, the Bollinger Band or the Bollinger bandwidth dropping to historic levels is something that we're looking for because that signals a squeeze. It's a prelude of something that's going to happen, and a breakout needs to be identified. So in a bearish squeeze, we're looking for that historic level on the Bollinger bandwidth, but at the same time, we're looking for the price to break the lower band on the Bollinger Band. One of the things that I try to do in this class is create a strategy around these concepts because we do have the indicators. We have Bollinger Bands and we also have the Bollinger Bandwidth. What we don't have is a strategy based on that concept. So one of the things that I tried to do for this class is build the strategy. I was halfway through creating the strategy when the class started. So maybe I'll show it to you and see if we can make some sense out of the code. There were some things like I saw some signals that were generated on places where they shouldn't be generated. So maybe we can debug our strategy together. These are some of the things that we are going to be looking for in this Bollinger bandwidth. For example, the Bollinger bandwidth indicator can help you identify a squeeze in the Bollinger Bands, and the squeeze signals consolidation, and a significant move may follow. In a squeeze, the direction of the breakout move depends on which band in the Bollinger Band indicator is broken. So we're going to take a look at both indicators at the same time. Again, we're looking for those historic lower levels on the Bollinger bandwidth, and then seeing if there's a break in the Bollinger Band bands. We're going to look for confirmation through other technical studies. So remember that we always recommend that you don't make trading decisions solely on one indicator. What we're looking for is agreement across multiple studies. And pullbacks are possible. So you may have everything line up as expected. For example, you may have very low historic levels on the bandwidth, and then you may have a very significant breakout on the bands, but then the market decides that it's going to pull back. So rather than continuing in the same direction as the breakout, there's a pullback and the market decides to go the other way. So there are market behaviors that are not always the same or guaranteed, and we always need to be watchful of those. So the fact that all these signals align perfectly doesn't mean that you have a guaranteed trade. It always has to be confirmed with other technical ideas. Let's go ahead and take a look at those indicators on TradeStation and understand them a little bit better. Let me disable the strategy, remove the strategy altogether, because I wanted to concentrate on the Bollinger Bands. Let me disable the Bollinger bandwidth. Okay, perfect. This is Home Depot, by the way, is on the chart. Let me scroll to the right-hand side here. And I've applied, the standard Bollinger Bands. Bollinger Bands, it's a very straightforward calculation. If you're not familiar with it, what it does, it draws a simple moving average through the candlesticks. So the gray line that you see right there in the middle, it's a simple moving average taking into account 20 candlesticks, or the closing prices of 20 candles. The value that we see at the very end, which is not plotted here on my price scale, because what matters the most in a Bollinger Band study is the upper band and the lower band. The middle band is just used as a calculation point. But the midpoint here, if you wanted to know what that value is, one thing that you can do is click on the background of my chart and bring your vertical axis right on that candle. Okay, you can see that at the bottom of my data tips window, you can see the upper band in blue, the lower band in red, and then you see the midline, 356.46. So 356.46 is the average price for the past 20 bars. Average closing price for the 20 auctions from that midline. Okay, I may have had issues here. So sometimes my internet decides to act up and I may have lost the sound for a moment. Okay, I think I'm good. So I was saying that once we have the calculation in place of the midline, all that is needed is calculate standard deviations. How far away from this simple moving average is the price move? If there's a lot of volatility, or if the candles are moving up and down, and this is reaching far away from this midline, the Bollinger Bands are going to be wide, because that's what the standard deviation calculation does. But if the candlesticks are small, are not moving significantly, then the Bollinger Bands are going to be narrow, because it's a measure how the prices are moving. So looking at this chart of Home Depot, and by the way, I just picked Home Depot at random. I was looking for different results on my strategy performance report, and I couldn't find a symbol that would give me good results. But on a symbol like Home Depot, what I'm looking for is areas like this one. I don't have, let me see if my drawing tools are still working on my computer. I haven't used my drawing tools in a while, but let's see. Okay, so let me move this out of the way, and I can probably use this. So what we're looking for is periods of consolidation. You can see how the price right here is moving sideways. You can see the bands in the Bollinger Band getting closer to each other. We don't see many areas where that happens. In fact, if I look at the area over here on the right-hand side, the price of Home Depot has been very volatile in the past few months, and you can see how wide the Bollinger Bands are. However, I may be able to circle this one right here. So even though this is not so clear, you can see how the two bands got a little bit closer to each other. So in another indicator that we supply with the TradeStation platform, we take this calculation and turn it into another visual. That way we can understand a little bit more about the squeezes and expansions. I think the title of the presentation was, we follow contraction and expansion, and the Bollinger Band study is great for us to do that. Let's go ahead and remove all my drawing tools. All right, perfect. And what I'm going to do is add that study, or that additional study, right here at the bottom of my chart. It is called the Bollinger Band width. So Bollinger Band width, everybody here should have this indicator on your platforms. Let me open up. All right. So what I'm looking at is the same concept of Bollinger Band, but represented differently in a visual. Now let's go ahead and see where these numbers come from so that we understand how to utilize this Bollinger Bandwidth, because it'll help us identify those areas of squeezes or areas of high volatility, depending on what side is it we're looking for. What this indicator does is it measures the difference between the two bands of the Bollinger Band. So let's go ahead and take a look. And to be able to freeze the calculations here, because one of the things that TradeStation does is that it updates every single tick. So even though we're looking at a historical chart, if I'm looking at these values here on the far right, these values are being calculated tick by tick using today's data. If I want to focus on historical movements, and I don't want these numbers to be updating because I want to focus on specific calculations, I need to make this chart historical and not have it updated in tick by tick. How do I do that? A quick way for us to set this chart to a historical chart is to change the last date. I'm going to double click on one of the candles. It takes me to customize symbol. And on the settings tab, I'm going to go here to the last date. The last date is always going to be today's date, but I'm going to go to the drop down and select the date of yesterday. So meaning that I don't want to include today's date. And then my chart turns into a historical chart. The values that you see here on the right-hand side are the calculated values as of August 12th, which was yesterday. So now I can make the calculations that I need. What it does, as I said at the beginning, is calculate the difference between the two bands of that volume. Pull up my calculator so that we can make the math here right on the screen. So we have 373.97, 373.97 minus 341.34, 341.34. And that gives us 32.63. What does that mean? It means that up until yesterday, the bands were $32.63 apart. Of course, this is Home Depot. And as I said a moment ago, the distance between the band of the Bollinger Bands is going to be different for every security, because every security we have will have different pricing characteristics. Home Depot is a stock that is trading at over $300 per share, compared to another stock like Verizon or Bank of America that doesn't quite even reach, the $50, I think. So the pricing behavior, the pricing characteristics, of course, are going to be different. And therefore, we're not able to compare these Bollinger Band numbers. Well, Home Depot moves more because it has $32, moves more than Verizon that only moves, $5. It makes no sense whatsoever to make that comparison because of the pricing differences. But one thing we do know about Home Depot is that there's $32 in the spread between the upper band and the lower band of the Bollinger Band. And what we do then is we take that difference and we divide it by the midline. I think we said the midline was 357.65. 357.65. So divided by 357.65 is going to give us this amount, 0.0912. If we take a look at the value down here for our Bollinger Bandwidth, you can see how the yellow line is being plotted at 0.0913. So the numbers do match. So notice how simple the calculation is. It's just the difference between the two bands. That value then is divided by the midline, and it gives us the yellow line can be read as a percentage too. So that 0.09 is actually 9%. 9% of what? Well, it means that the difference between the upper and the lower band represents 9% of the value of Home Depot, of whatever the value of that is, which is $357. So the width is just 9% of that value. So you can see, if you think of percentages, maybe then you start thinking, okay, the higher the percentage means that the difference between the upper band and the lower band is greater. As the percentage gets lower, it means that the upper and the lower band are closer to each other, if we think about the percentage of the value of the security. So this is what the Bollinger Bandwidth is just telling us. How far away are the two bands from each other? What the other two dotted lines are telling you is historical higher highs and lower lows on that calculation. So the 0.9 that we saw here, it's not 0.9, it's 0.09. The 0.09 that we are talking about here means nothing if we don't have the highs and the lows, or the highest and the lowest values of that calculation, to see how it relates to historical values. So what it does, in fact, let me go ahead and put the easy language for this indicator, because whenever I have any type of questions about how things are calculated, and this is something you can do as well, is open up the easy language code for that indicator just to go into the details and see, okay, where did the numbers come from? So I'm going to right click on the indicator that's right here at the bottom. And this is something you can do on your TradeStation platforms as well. Right click on the indicator. I'm going to click on easy language for Bollinger Bandwidth. Okay, opened up on another screen. We're over to this one that's being shared. Okay, so this is the easy language for the Bollinger Bandwidth. All I'm going to do is I'm going to scroll down here a little bit, because you can see on line 36, bandwidth is being calculated, and it uses a function which is Bollinger Bandwidth. It's fine. I mean, you can right click on this function and open up the function. And here you can see how it's calculating the upper band minus the lower band divided by the average. Exactly what we just did just a moment ago on the chart. We took the upper band on the Bollinger Band, subtracted the lower band, and then divided it by the midline. It gave us the Bollinger bandwidth. So this is just a confirmation that what we did is exactly what's inside of the function. If we go back here to my Bollinger bandwidth indicator. Let me go ahead and close this one. Okay, here's the indicator. We're back in the indicator. Another thing that gets calculated here, is it the one? This is Bollinger Bands. Let me go ahead and Bollinger bandwidth. Here we go. Okay, in the bandwidth, another calculation that's happening is looking for the highest bandwidth and the lowest bandwidth, which is interesting because it's also looking at a historical reference on how high or how low the bandwidth has been. If I look at the chart one more time, then the dotted line here on the blue is how high that bandwidth has been in the past. I believe it's looking at 20 days, if I'm not mistaken. Let me double click on this indicator, go to the inputs, and here it is. The length is 20. Actually, no, it's looking at 50 days. So the bulge length and the squeeze length is different than the length used in the Bollinger Band. In fact, that's something we can change depending on how far back we want to take a look at the bulge and the squeeze. Bring up easy language one more time. You see, it's not using just length, it's using the bulge length and the squeeze length. How far back am I looking just to determine what the highest bandwidth has been in history? If I scroll down here, let me minimize this here. So if I look at, for example, Home Depot, I can see a 0.14, which is the value in cyan at the bottom right, for the bulge, meaning that the highest or the widest, let's put it that way, the distance between the two bands of the Bollinger indicator has been is 14%, or 14% of its value. And the lowest it's been, it's 0.07. Right now, it's at 0.09. So we can see how far is that, you know, the distance between the upper and the lower band in relationship to values. Of course, the further back you look, the more significant those numbers are going to be. This is just 50 bars or 50 trading days. If let's say, for example, that we want to increase that to 100, I'm going to double click on the indicator. So one more time, go to the inputs. And if I change that to 100, before I click OK, I want you guys to pay attention to what happens right here on this dotted line, the blue dotted line and the red dotted line, because this number that I'm changing here in the inputs is going to directly affect this, because not only is it looking for the highest value on the yellow line or the lowest value on that yellow line for the past 50 bars, it's going to take a look at 100. And if I click OK, you can see that it shifts completely, because look back 100 bars, then the highest value is over here. You see the highest value is at 0.21. So at a certain point in the history of Home Depot, the distance between the upper band and the lower band was 21% of its price. You can see how we can see that distance right here. There is a big bulge right here between the moving averages. I'm sorry, the bands of the Bollinger. On the other side, which is the squeeze, is what the basis of this presentation is, meaning that we're looking for a period where the bands are getting closer to each other and are signaling that something's about to happen. There's a breakout due, because securities cannot move sideways or consolidated forever. It's going to break out in either direction and provide us with some movement. But you can see that right here at the bottom, we have the lowest value has been at 0.04. So 4% of the value of the security is the distance between the upper and the lower band. When did that happen? It happened back here. I believe it's this right here. Yeah, right here. Now you can see that that correlates with these two bands kind of getting closer to each other, like somebody would just grab their fingers and pinch those two bands together. That's where the squeeze is happening. A lot of times, you get a squeeze like this, like the one where my cursor is. You see a clear breakout on the upper band. Based on the information that we saw on the slides, I would have expected, the price to continue in that same direction. So we have a consolidation period, a breakout on the upper side. Seems like it's a bullish signal, but then there's a pullback. Notice that the candlesticks pulled back into the midline after it dropped, and it broke that midline and actually just went to the other side of that Bollinger Band. So that's when we say some of these signals that are standard on some technical indicators may not always follow through. So we need to have confirming indicators, allowing us to have more like a second opinion when it comes to where the trend is headed. So this is Bollinger Bandwidth. One of the things that I was doing, let me see what time it is. Okay. One of the things that I was doing is designing a strategy around this where, okay, if we have a historically low level on the squeeze side, we're looking at the squeeze side again. So we have a historical level on the squeeze side, and there is a breakout on the Bollinger Band. We are going to take, I started building the strategy. I didn't get far. I wish I had a little bit more time to tweak the signals, but this is what I came up with. Let me pull up the easy language code. And I really don't want to share the strategy yet with you guys because it's not complete. I wanted to maybe work on a little bit more so that we could get a little bit more testing out of it. But this is just the inputs on, let me just remove some of the information here to simplify the code. A lot of times, some of these inputs and variables can be initialized just to make the code a little bit more efficient. What I'm going to do is turn this into a one-liner, and that way I can read the bottom of this code. Okay. Okay, so these are my inputs. I have my variables. I needed the Bollinger Band calculation, so I had to bring those back into the code. And we have the midline right there. We have all the variables calculated. Notice that we are calculating the lower band and the upper band. I think my error was somewhere here where I copied and pasted pieces from indicators and brought them over here into the strategy. I am calculating the bandwidth so that we can identify the squeeze level. Remember, the bandwidth just tells you how far apart the Bollinger Bands are. And we have a bulge line and a squeeze line. So the basis of the strategy is looking at the squeeze line and looking at what the value of that squeeze is. So the Bollinger midline was just the average. I needed that calculated, but let me move that here so it's right after the upper band, lower band, and the midline, and then the three calculated values for the bandwidth. And this is my strategy rule was simple. If the squeeze line is less than the squeeze line 10 bars ago, or in this case, I'm looking at a daily chart, so it's 10 days ago, meaning that if the squeeze line is a lower value than what it was 10 days ago, and the close crosses over, the close here would be the closing price, crosses over the Bollinger upper band, then buy next bar at market. Straightforward, right? If we have a squeeze line again, maybe this is what, maybe it's, I'm going to say 5 days ago, not 10 days ago. I mean, there's been a drop in the squeeze line. And this is looking at squeeze length 50, which is fine. For now, let's go ahead and leave it like that. But what I said is that, okay, if we are at a historic level of the squeeze line, or at least, less than what it was 5 days ago. Notice that in the squeeze line calculation, we're looking at 50 historical days. We can increase that if we want. But if we are at a historic lower level and the close crosses under the lower band, meaning that it's on the lower extreme, then we're going to sell short. We can invert those if we wanted to, if we are, taking a more contrarian approach. And then here, if market position, let me take a look at the definition of market position. Market position can be three things. It can be 0 if you're flat, it returns -1 if you're in a short trade, and it returns 1 if you are in a long trade. So if I'm long, meaning that market position equals 1, and the close crosses under the Bollinger lower band, then I'm going to sell. So what happens is that my idea here was, okay, if I'm in a squeeze, Bollinger breaks to the upside on the upper band. I'm expecting the price to continue in that same direction of the breakout. But if all of a sudden the price turns down and it goes to the other side of that Bollinger, then I may not be bullish anymore. So I'm going to sell next hard market. And the same thing happens here if I'm on a short trade. If I'm in a short trade and all of a sudden the price goes beyond the upper band, then I may not be short anymore. So that was my idea, thinking about how I could use the Bollinger Band as a signaling agent in terms of close my position if it's going the opposite direction. Let me verify this, and let me go over to TradeStation and apply it. Let me change this into Spider. But yeah, let's go ahead and take a look at Apple. I haven't looked at any of these, securities. I haven't looked at Apple and how the strategy behaves here. Let me show you some of the things that I found that I know is an error. Let me go here, go to studies, add strategy. And this one I called add MC Bollinger Bands Squeeze. I want to click OK. All right. So, okay, so maybe the conditions need a little bit of work. Because what we were talking about, the entry, here's a buy signal. It broke the upper band, but then my squeeze line, you can see the squeeze line value here is 0.04. I'm looking at the squeeze line. Maybe that's a problem. Yeah, I'm looking at the squeeze line. So the squeeze line needs to be less than the squeeze line 5 days ago, or 5 bars ago. That's hard-coded into the conditions. Squeeze line less than squeeze line 5 days ago. So one of the things that I was looking at first was, okay, it entered the market right here, so the condition must have been met on this bar, which is 8th. But on December 8th, the squeeze line, you can see the squeeze line value right there, 0.048, is the same 0.048 for several bars. So the condition of, that squeeze line being lower than the squeeze lines 5 days ago, not quite, not meeting that criteria. That's why I'm not liking how the strategy is generating those signals. Although here, let me look at the very first trade on this chart. Okay, so again, very first trade. Oh, the squeeze line here is 0. That's because it's the beginning of the chart. It can never be 0. It's just the calculation needs to be done again. Yeah, so not a complete strategy, but Tony's asking, can you use an ATR stop and profit target with this buy sell strategy? Yes, for sure. You can use an ATR stop. So what I would do, for example, if come here to the code and change my exit criteria. See, my exit criteria is looking at the crossover on Bollinger Band. But in your case, Tony, you would have to make a calculation on ATR and set a stop that way. We have, ATR stops already. So even if I were to comment this exit criteria out, let me go ahead and comment it out. If I go back here to my TradeStation, you can see that I have no exits. I can still include one of the strategies that calculates on ATR. So let's see, I think it's towards the top. It's called an underscore. Let me see if it ATR trailing LX and SX. I can enter those two strategies and it automatically generates those signals for me. When it enters the market, let me see if I see a signal. Let me just scroll back here. Yeah, you can see how the trailing ATR kicks in. So it's built-in strategy. You can use it out of the box and see what the results are on your strategy performance report. So let me continue working on the squeeze strategy, but the idea is there. We have the two studies. We have the Bollinger Bands. We have the Bollinger Bandwidth. Which can also be utilized in measuring squeezes in the market, and be attentive to those breakouts to the upper side and the lower side, because it is necessary for me to test that idea and see if it's something that is sound. And the great thing is that we have the tools that are in it so that we can do a historical back test and understand, that idea a little bit better. All right, that's my class for today. Thank you guys for joining me today. Let's keep an eye on the schedule on the events calendar. We post topics every single week about what's upcoming. So make sure that you check that periodically for upcoming classes. Have a wonderful afternoon, and I hope to see you in one of my future events. Goodbye, everyone.